This afternoon, USDA releases its monthly cattle on feed report. In advance of that report, live cattle futures rallied higher this week. Pro Farmer editor Chip Flory and senior market analyst Brian Grete join us from the Pro Farmer studios to look at the potential for cashing in. With corn and soybean harvests getting close to 3/4 done, something like that, corn is past it. There's been a lot of talk about the corn and soybean markets. And while there's been all this talk about corn and soybeans, the livestock markets have quietly been moving higher. And the rally has been no more quiet than in the hog market. It's just been a slow grind up. And it's being led up by the cash market, right, Brian?
Sure is. You know, the packers are cutting in the black, and that's a positive thing. When that happens, they have a tendency to pay more on the cash end of things, and that's exactly what we've seen. The other factor that comes in, you know, we got a big flush in that market this summer. Because of all the fear of the liquidation, herd liquidation and all that stuff. And as that played out and we came to the realization that, hey, it wasn't quite as bad as what everybody anticipated, that's also allowed the market to move higher.
Exactly, and we're about $9 off the summer low already. Is this the time to go ahead and lock in some of these lean hog prices?
Well, I think that it's in the ballpark of getting close, at least. You have to watch it because seasonally we're still building slaughter supplies as we move through the end of the year here. So timing-wise, we're probably getting real close. The key is going to be those packer margins in the pork product market, and when we see a top in the pork and packer margins, if they do go into the red, that's going to be probably your opportunity to lock in.
Yep, when the packers start losing money, it's going to be time to go ahead and get some hedges on. Exactly. The rally in cattle hasn't been nearly as structured, been chopping all over the place, and it seems to be being led by the box beef market.
Yeah, box beef, I mean, very strong, solid domestic demand here, good export demand as well, and then as a result, the boxes are holding in there really well. The choice is currently trading around 195 and a good solid level, but there's a, you know, we've seen some resistance from the retailer side of things at that price level, so we kind of got to watch for a short-term top.
Still, it feels like we're going to see this cash market trade at or above 130 in the next couple of weeks, right?
Yeah, I just can't imagine with the supply side tightening up, unless the demand completely falls apart, it's well supported.
Exactly. So if we've got some strength coming in the cash market, do we need to be putting some hedges on in cattle?
You know, I don't think so at this point in time, but if we do get a big run up to the upside and it looks like the top is overdone there, then that's when your opportunity probably comes.
Exactly. Keep a close eye on the livestock markets. For Brian Grete and all the editors here at Pro Farmer, I'm Chip Flory. Thanks, guys. The Pro Farmer newsletter comes out later today. Chip, Brian, and the team will have the first look at the 2013-14 supply and demand tables. Widespread rains boost soil moisture, but long-term outlook shows limited hope for drought relief. And the Chinese economic data hints that the worst is in the past.
Pro Farmer. Make great decisions and become a member today. Call or visit profarmer.com.